Hi traders, it's Roberto, and this is a continuation of our series, part 2. In this video, I'm going to go over continuation patterns when the market is obviously in an uptrend or in a downtrend, and how you can re-enter the market simply just by using candlestick patterns and the 1-hour scalp system. Okay, we know the pound yen, well, all the yen crosses were in an uptrend. And how do we enter the market after the market has actually been put in so many pips, and it's obviously done its daily range? So this is where we entered a trade at 142.53, and I'll show you. That was down here actually. That was down at these levels. Okay, so let's say that you missed the trade. Okay, and the market's going up. Obviously, we're in an uptrend. And what you want to do is wait for a pullback. So two things you can do. You can wait for the market to wait for a color change candle, which was here. Here, 3 consecutive red candles, followed by a color change candle, and you would place a trade 8 pips above this candle. So the candle closed at 142.98. Your entries was 143.07, and you would be up approximately 76 pips right now on this trade. And the same thing here, we had the market broke out of this range bound conditions. We had, let's say that you saw this move, but you want to re-enter the market, but you weren't able to get in at the bottom. You missed this breakout. Well, all you need to do is wait for the retracement. Here's a color change candle, and it retraced. And then you would enter. Here is a color change candle going in the direction of the trend. So you would take a trade 8 pips above this candle here. And that would have been this candle. And your entry would have been around here somewhere. And if you would have taken it up to the next color change candle, that was about 44 pips. So that's how we trade continuation. When the market's continually going in the direction up or down and you want to re-enter the market, these arrows are the entry points just based on the color coded system. Now notice that the price right now, we're entering today's non-farm payroll. It's Friday the 8th, so 1, 2, 3 green candles, and now it's starting to print a red candle. So that could be a retracement candle. If this candle closes, which we still have about at 1 hour, and it prints 8 pips lower than it's going to retrace, and then we will look for price exhaustion so we can buy. Another way you can enter the market is that you draw a fib from the swing low all the way up to the swing high. Price came back down to exactly 23% retracement level, and there was a color change candle, so that was the entry. And let me remove that fib and see what the other entry would have been if you would have used fibs. So we know this is a swing low now. Market shut up, came back down to support. So this is the new swing low. And we draw a fib from this swing low to the next swing high. Now, of course, we don't know this is the next swing high until a color change candle prints. So we draw a fib from the swing low all the way up to the swing high. And notice I'm drawing fibs on the body, not the wicks. And price came back down to about a 50% retracement level. And then the next candle was a color change candle. So that would have been a good entry. You didn't really have to wait till the market printed 8 pips higher. You could have just entered the trade at a fib level. And why? Because we're in an uptrend, and all you need to do is enter a trade when the market comes back to a fib level. And you'll get a better entry than if you would have waited for this candle to close and waited for 8 pips above this candle to trade. Okay, let's look at some more examples. This is the Canadian yen, and essentially it's mirroring pound yen. It's the same thing, where if you would have missed this breakout down here, and the market went up. So all you need to do is wait for the market to retrace, and it did retrace. We had 6 or 7 green candles followed by a color change candle. The market retraced, but then what happened? We had a color change candle in the direction of the trend. So you would enter 8 pips above that, right there, and there's your trade. Again, the market retraces. We have a color change candle. Market comes back down, and because we have directional buyers, which is positive. We're not interested in taking a trade against the ebb and flow of the market. What we're looking for is exhaustion and then price to resume its trend. So here's your color change candle, and you would enter 8 pips above this trade, and you would be up about 30 pips. So when the markets are continuing in an uptrend or a downtrend, what you're looking is for price exhaustion, a color change candle, a retracement, and then another color change candle in the direction of the trend, so you can take that trade. Okay, let's spot a couple of more examples. This is the euro pound. Notice that price was in a downtrend and then it recovered, broke a swing high or the trend line. You could have drawn a trend line here. Notice that price now is in an uptrend. So what do? You wait for the retracement. Here was a huge retracement from this level to here. But then it recovered. We had a color change candle. Again, you place a trade 8 pips above the color change candle. And there's your trade, 87.90 pips. Okay. And again, what you do is you have to recognize what directional bias. What is the trend? Is it up or is it down? Well, it's up. So what do you want to do? You want to wait for an exhaustion, a retracement, and you can either draw a fib from the swing low. This is the swing low of this day all the way up to the swing high of this area where we had a color change candle. And price came down essentially to the previous resistance turn support. And you wait for a color change candle. Stochastics oversold on both 21 and 14. Color change candle, we had 1, 2 red candles followed by a color change candle, and you enter 8 pips above this trade. And then the same thing happened again. We are in an uptrend, wait for the retracement. 1, 2, 3 red candles followed by a color change candle, and you enter the market again. And here's one last example on the euro yen. And again, there was a breakout 2 days ago. Right there, the market broke out of this range-bound conditions. We're in an uptrend. So if you miss this uptrend, just wait for a color change candle and wait for the market. This didn't actually retrace at all. It just consolidated. But regardless, what you do is just wait for a color change candle and take the trade in the direction of the trend. Okay. Here we had 2 red candles followed by a color change candle, and we want to again take trades in the direction of the trend. So we wait for a color change candle and enter on the next candle going up. Okay. And that concludes our tutorial on the 1-hour scalp system, trading in the direction of the trend. Part 3 and 4 and 5, I'm going to add more parts. We are going to talk about false breaks, candlestick patterns, reversal patterns, divergence, and what is called a big stone trade. It's a very aggressive trading strategy.